Jumbo rate cuts could be back on the table for the Bank of Canada amidst the Canada-US trade war turbulence. But unlike Bank of Canada's previous jumbo rate cut we saw last year to, save the economy, the rate cuts this time around will hit differently. The key difference here is that there's a significant number of Canadians that are afraid of losing their jobs because of all the uncertainty around tariffs right now. The tariffs have, essentially caused a pretty widespread fear across all industries and all sectors. And the trade war pain is really going to be predicated on how long they're going to last. We're only at the beginning stages of these trade wars, and it's already causing a catastrophic collapse of one of Canada's biggest and longest standing retailers, that being Hudson's Bay Company. They were already kind of in trouble before, but this trade war, as per these articles, was basically the final blow that made the investors back out to save them. Could this happen to more Canadian companies that will completely wipe out jobs across the country? Nobody knows. And this is why the fear is very real. And it could cause a major recession in Canada, one that we have not seen before in a very long time. If people are unemployed, the real estate crisis will take a backseat. Toronto real estate sales are currently at the same level that it once was during the great financial crisis in 2008. But its downward trend could mean things could get a lot worse from here with no end in sight, because we don't know how long these trade wars are going to last. And here's the thing. The great financial crisis didn't really impact Toronto real estate after a few months. It dropped interest rates because of the US. So in the grand scheme of things, it was kind of a minor blip. But with the current trade war, every single Canadian is going to feel it at some level regardless. So brace yourself for what's to come. And this is why in this episode, I'll be going through everything you need to know about the current real estate market and how to traverse through it if you're trying to buy or sell. On top of that, I'll also be talking about who has the advantage and who doesn't, so make sure you stay tuned for the entire video. Hi, my name is Zen, and if you're enjoying my data-driven and number-crunching real estate updates, be sure to like and subscribe. The idea of interest rates, mortgage rates specifically, getting below 4% felt like a dream a year ago when we were hovering around like 5.5 and like even early in the year 6%. Mortgages right now are in the low fours with the insured mortgage, so like below 20% down, below 4%, and a very high likelihood of it coming down some more later this year. Just listen to CIBC's chief economist.
So I believe that the Bank of Canada will continue to cut interest rates in a very significant way. I will not be surprised if by June, July of this year, we're going to see the Bank of Canada cutting the overnight rate to about 2.25, maybe 2%. I think that if it continues, if this madness continues, we are going to see a situation in which interest rates will go below 2%. And that's something that we have to look into, because the economy will be needing monetary support. If you look at interest rates over the next few months, because of the uncertainty and the slowing economy, we are toying with a recession, basically.
But despite all this good news, the Toronto real estate market is frozen. Prices aren't going up because rates are coming down. That narrative has not been the case in the last 3 years. The market is frozen because of what I've been saying a lot in the last few videos. Uncertainty. People are uncertain about their jobs. If they are uncertain about their jobs, they won't be making large purchases, like your home, which potentially is the largest one. This is why in the latest numbers, it shows that we have great financial crisis level of sales. So back to 2008. The consumer confidence is also so bad, it's borderlining comparable to the level it was during the pandemic. Both the pandemic and the current trade wars have uncertainty baked into it, and a lot of people are potentially losing their jobs. It's just the sectors are different right now. During the pandemic, it was people that were working face-to-face in person. Right now, it's people in the auto industry or whatever is affected by the trade wars, and the layoffs are happening fast. While some kind of government stimulus or bailout or whatever can happen, the political environment for that right now is very tough, and it's different from the pandemic because we have a new prime minister that may call for an election soon. So the leadership in Canada is a little bit wonky. And then you got the Bank of Canada, who is doing everything it can to save the economy, but when things get tight, Canadians will save for a rainy day. The other factor that can't seem to be measured is even if we get monetary and fiscal stimulus, I think the pandemic is still like so close in the rearview mirror for a lot of people, and they still remember kind of the whiplash of a very good booming economy, everything being great, and all of a sudden it being very bad again. So spurring that onto Canadians so quickly with it, still just a few years behind, I don't think it's gonna cause Canadians to loosen their wallets because of the trade war. I think it's gonna be a very rough time for the Canadian economy, and a recession is definitely gonna happen.
Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, put decades of experience to work for you.
And this is why the real estate market is frozen. Don't get me wrong, like the 10 out of 10s are still gonna sell, but the pace of which properties are selling is abysmal. Like the month-to-month change in sales in this chart over here is so bad. It's 30% below the previous month. And for context, what this means is that we're seeing sales drop from the previous month faster than during the massive rate hiking cycle we saw in the first quarter of 2022. That's how bad it is. Sales are dropping that much more than in 2022 when interest rates went from like 1% to 5%. And you can see that it's basically when the trade war talks started. We dropped 30%. It's not a coincidence. This is why the unsold inventory is very high right now. We've crossed 20,000 unsold properties again, and spring market is just about to start. This is the first week after March break where we should be getting a lot more listings as well. Now, one thing I will note is that while properties are not selling, the amount of new listings, so new properties coming to market, is actually normal, right? There isn't like a massive flood of people needing to sell right now, but of course that can change as trade war progresses, depending on how long it goes. And I'll be monitoring that for you very closely, so make sure to stay tuned to the channel. And this is why the months of inventory is over 5 again. And this is why it's really, really important to really, really understand the micro market down to the condo building you're selling in, or each home that's selling in your neighborhood, so you can understand the foot traffic, the offers, the pricing, the amount of showings. It's all very important. So while this could be bad for a lot of people affected by the trade war, it could also be opportunistic for those who are not. So I'm gonna list out all the people in the Toronto real estate market who are planning to transact that have the advantage right now. And the person who has the most advantage in the current market right now is anyone who is trying to buy their first property in Toronto, and that property being a condo, especially if they're renting right now, has all the advantages in the world. There are tons of condos for sale, next to no competition. Prices are flat at best. And the reason why I think some first-time home buyers aren't actually moving as quickly as they should be right now is because the smart ones also kind of understand that given what has happened in the last 2-3 weeks, there's potential for more rate cuts as inventory continues building up, making the buying opportunity more advantageous for them in the coming few months. Those with the most disadvantages in the current market right now are going to be landlords. You got rents coming down, the rental supply increasing with a lot of pre-cons closing and purpose-built rentals closing, immigration is dropping, and I really haven't seen it this not cool to be a landlord in a very long time. So selling a tenanted property is very difficult right now. So it's putting the landlords who need to sell or even want to sell not in a very good spot. Now, for those looking to move from like a condo to an entry-level free home, it's hard to sell your condo and it's hard to buy an entry-level freehold right now because amongst the entire kind of category of markets, it is the most competitive. So if that is you, you should 100% be selling your condo ASAP right now because the condos are likely to get worse before the entry-level market for freeholds. As for those looking to upgrade like their house to a larger detached home, it's the opposite of the condo move-up buyer. The detached market, like over 1.7 right now in most neighborhoods, is slower given the higher price point, and the entry-level freehold is a bit more competitive. So there is an opportunity right now for you to make that upgrade. While all this trade war is happening, I really think that with interest rates coming down, the ability for anyone who owns a home and carrying a mortgage can keep their homes easier because the costs on a monthly basis is coming down. And the mortgage renewal cliff is likely going to be mitigated. Where the real damage really will come is from all this uncertainty in the buyer's confidence and people not being able to sell their property, especially anyone who loses their job and needs to sell their property. That's where I think most of the damage is going to be caused. While all of this is bad, I really don't think we're going to see like 20% crash level price drops for the Toronto real estate market. But of course, with all of this craziness from the president in the US, things are subject to super volatile change on a day-to-day basis. It's just insane. I hope this gives you an idea of where the current real estate market is in Toronto right now with all this craziness and uncertainty. If your income isn't affected by these trade wars and you do want to know how to buy a low-rise home at a lower price in this current market, make sure you watch this video right here where I talk about the type of low-rise home that most buyers miss that can be a great opportunity for you in this year. I'll see you in this video. Until next time, your move, your future. See ya!